with me, Kanishka Sarkar and Srishti Sharma, and it's time now to take a look at some macro trends that are emerging. And tariff turbulence that has failed to dim India's growth prospects, really. Now, the first advance estimate for FY26 show that the GDP growth is pegged at 7.4%, which is much higher than 6.5% in the previous fiscal. Now, the 7.4% growth outlook is also higher than what RBI has forecast, which is at 7.3% growth for the current financial year. Meanwhile, some slowdown is seen in nominal growth, which reflects the total value of goods and services that were produced within a country during a given period of time at current market prices. That is expected to fall to 8%, that's against 9.8% last year. Now remember, this data is crucial as it forms the base for all of the budget 2026 calculations. Now if you look at the fine print of the first advanced GDP forecast numbers, manufacturing and services sectors, they stand out as the major sectors behind the uptick in growth projections, with both of them expected to rise at 7% and 9.8% respectively. Meanwhile, there's the agriculture and construction sectors, which are likely to see some sluggishness this time around. Mining too is expected to hit a rough patch, with growth coming in at minus 0.7% versus 4.6% last year. On the other hand, we have private investments for the year, which are expected to expand by 7.8% compared to 7.1% last year. In fact, my colleague Prakash filed this report earlier with all of the details and the number crunching. Let's take a look.
Well, the first advance estimates of GDP for FY26 is reflecting the resilience of the Indian economy amid challenges from external sectors. We are facing tariff-related disruptions along with geopolitical uncertainties, and therefore, with 7.4% GDP growth, which is reflecting the strength of the Indian economy, it has ensured that India will remain one of the fastest major growing economy in the world. Along with that, these numbers were keenly watched and very crucial for the government, as it will be taken into account before announcing policy-related measures in the upcoming budget. It is important to note that the MOSPI is expected to announce new base year for GDP calculation next month, and therefore these numbers hold significance. It has a positive impact of massive rate rationalization under GST. We have seen massive rate cuts, and therefore services growth, consumption-led growth has been factored in. If you look at the sectoral performance, financial sector, real estate, professional services, public administration, defense and other services growth seen at 9.9% in FY26, whereas trade, hotels, transport, communication, services related to broadcasting sector has seen estimated to grow by 7.5%. Along with that, manufacturing and construction in the secondary sector has been estimated to grow by 7%, whereas agriculture and allied sector growth seen at 3.1% compared to 4.6% in FY26, which could be a major area of concern for the government where there is scope for growth. Back to you.
All right, thank you so much, Prakash. But let's also listen into what experts have to say on this number.
We were expecting GDP growth of 7.5%, and the number has come at 7.4%. So it's broadly in line with expectations. But if I look at the breakup, what surprised me a little bit was the growth estimate given for consumption and investment. So if we look at the GDP growth number given for consumption, basically it is factoring in that there would be some moderation in consumption growth in the second half of the year, which I found a little surprising because we were expecting the consumption growth momentum would pick up further because of GST rate rationalization, lower inflation and all those factors.
No surprise in numbers. So the 7.4% number is perfectly in line with expectation. The sectoral trends are also quite in line with expectation. You are absolutely right that compared to the 10% nominal GDP growth focus, now it comes around 8%. It's a challenge to maintaining the fiscal deficit ratio target. Also, the government these days are quite committed on the public debt to GDP number also. So it's a challenge for both.
All right, so that's about the macro trends and the GDP forecast. But now let's put the spotlight on the aviation